If you could go back in time and change just one financial decision, what would it be? Have you ever felt like you missed incredible opportunities simply because no one taught you how to invest the right way? The truth is, most people spend years working hard, saving, but never really seeing their money grow. And the worst part? They only realize this too late. But what if I told you there is a simple concept that can accelerate your financial results and prevent this regret? In this video, I'm going to show you exactly what I wish I had learned earlier, and that could have changed my financial life much faster. It doesn't matter if you're just starting out or if you already have experience. Understanding this can make all the difference between years of frustration or achieving financial freedom much sooner than you imagine. So stay with me until the end, because this might be the turning point you've been looking for. And if you don't want to make the same mistakes, go ahead and like this video and subscribe to the channel so you don't miss any more content that can transform your financial life. Now, pay close attention because what I'm about to tell you can save you years of frustration. Do you know what the biggest financial mistake almost everyone makes is? Believing that just saving money is enough to build wealth. We grow up hearing that all we need to do is put a little money in the bank and that, in the future, everything will be fine. But this mindset is sabotaging you. Money sitting idle loses value over time. And while you leave your money in a savings account earning almost nothing, other people are making their money work for them. What happens? Years later, they're rich, and those who just saved remain in the same place. Now, think about this. How many times have you delayed starting to invest because you thought it wasn't the right time? This is one of the biggest financial regrets people have. If I could go back in time and teach myself one thing, it would be exactly this. Don't wait for the perfect moment, because it will never come. What I hear the most is people saying, "Oh, but I should have started 5 years ago." And do you know the answer to that? The second best time to start is now. And I know, you might be thinking, but I don't know anything about investments. Or, I don't have enough money for that right now. But that's another lie we've been told. You don't need a fortune to start, and you don't need to be an expert either. What truly makes a difference is time. The earlier you start, the more you benefit from a magical factor called compound interest. Let me show you a practical example. Imagine you start investing just $300 per month, with an average return of 10% per year. If you do this for 20 years, without withdrawing anything, do you know how much you'll have accumulated? More than $200,000. Now, if you delay and start only 10 years from now, the same amount invested would generate less than half of that. Time is the most powerful factor in investments. And that is exactly what separates those who get rich early from those who spend their whole lives trying to achieve financial stability. Now I want you to comment below. If you could go back in time, what financial decision would you change? I'll be reading the comments and interacting with you because this kind of exchange can help many people avoid the same mistakes. But okay, now that you understand the importance of starting as soon as possible, how can you put this into practice today? The first step is to change your mindset. Stop seeing money as something that needs to be saved and start seeing it as a worker. Your money has to generate more money. This can be done in several ways. Fixed income investments, stocks, real estate funds, or even your own business. The most important thing is not where you invest, but that you invest. Here's a simple strategy you can start today. Define an amount you can invest every month and do it automatically, before spending on anything else. It could be $100, $500, or whatever fits your budget. The secret is consistency. Those who invest regularly, even if it's a small amount, go much further than those who wait until they have a large sum. Now, let me ask you something. Is this content helping you? Then take a moment to like this video because that really helps me continue bringing videos like this to you. And if you haven't subscribed to the channel yet, subscribe now so you don't miss any more valuable financial insights. But what if you do nothing? How much will it cost you to keep postponing this decision? I've already shown you how time directly impacts your wealth. Now think with me. How much money have you already lost just because you didn't start earlier? And worse, how much more time will you lose if you keep delaying? This is the difference between those who retire comfortably and those who have to keep working to pay the bills. So, let's recap. Saving without investing will not make you rich. Delaying the first step will cost you a lot in the future. And starting with little is still better than not starting at all. Now you have everything you need to take action. The only thing missing is for you to take the first step. And if this video made sense to you, I challenge you to share it with a friend who also needs to hear this. Because knowledge only has value when it is put into practice and shared. So, comment here, what has been your biggest financial regret so far? And what will you do differently from now on? I really want to know, and I will reply to the comments. Most people spend their entire lives believing that saving money is enough to build wealth. From an early age, we hear that we should save money for the future, but no one teaches us that saving alone is not enough to create wealth. This is the mistake that prevents thousands of people from achieving financial freedom. If you put your money in a savings account and think you're on the right track, this chapter will show you why this strategy is keeping you stuck in the rat race. The problem with savings is not just the low returns but the false sense of security it provides. Idle money loses value over time due to inflation. Imagine that today you have $10,000 in a savings account. In 10 years, that same money could be worth less than half of what it is today in terms of purchasing power. Meanwhile, those who have learned to invest make their money grow and take advantage of compound interest. The mistake is not in saving but in failing to give your money the opportunity to multiply. If saving were enough to get rich, everyone with a full savings account would be wealthy. But in reality, that doesn't happen. That's because traditional savings accounts cannot keep up with economic growth and inflation. Every year that passes, your money loses value if it is not invested wisely. Let's do a simple calculation. If you saved $1,000 per month in a savings account for 30 years, at the end of that period, you would have approximately $360,000. Sounds like a lot. Now, compare it to someone who invests $1,000 per month in assets that yield 10% per year. That person would have over $2.3 million in the same period. The difference is brutal. In other words, saving money without investing is like trying to fill a bucket with holes. How many times have you told yourself, when I have more money, I'll start investing? This mindset is one of the biggest enemies of your financial growth. The truth is, there is no perfect moment. There will always be a reason to delay, but the sooner you start, the more advantages you will have in the future. The financial market may seem intimidating for beginners, but the biggest mistake is standing still. While you wait, other people are seizing opportunities and building wealth. And you don't need to be an expert to start. All you need to do is take the first step. Time is your greatest ally, and every year lost could mean thousands or even millions less in the future. Albert Einstein called compound interest the eighth wonder of the world. But why is this concept so powerful? Simple. Compound interest makes your money grow exponentially over time. Imagine you invest $500 per month in an asset that yields 12% per year. In the first year, it may seem small, but after 20 years, you will have accumulated more than $500,000. If you continue for 30 years, that amount surpasses $2 million. The secret is to start early and be consistent. This is how the wealthy multiply their wealth, while many remain trapped in the illusion that they need to earn a lot to invest. The belief that you need a lot of money to invest prevents many people from starting. But the truth is that even small amounts can generate surprising results in the long run. If you invest just $100 per month in assets that yield 10% per year, in 40 years, you will have more than $600,000. Now, imagine increasing that amount to $500 or $1,000 per month. You could become a millionaire before you retire. What matters is not how much you start with, but the discipline to maintain this habit over time. What separates those who thrive financially from those who struggle? The answer lies in mindset. Many people have been taught to fear money and see investing as something risky. This creates a mental block that prevents financial growth. To change your life, you need to reprogram your mindset. Stop thinking of money as something that should only be saved and start seeing it as a resource that can work for you. Millionaires understand that money must be invested and multiplied, not just stored away. If you have never invested and are starting from scratch, it may seem like the financial market is a complicated world, full of technical terms and unknown risks. But the truth is that investing can be simple, and more importantly, it can completely change your financial life. The first fundamental point is to understand your investor profile. There are three main profiles: conservative, moderate, and aggressive. If you don't like taking risks and want security, you can start with fixed income investments such as CDBs, LCIs, and treasury bonds. On the other hand, if you're looking for a balance between security and growth, you might consider real estate funds and stocks of solid companies. Finally, if you have an aggressive profile and are willing to face market fluctuations, you can explore growth stocks, cryptocurrencies, and other more volatile assets. Now, a common mistake for beginners is chasing quick and immediate returns. It's essential to understand that wealth building is a long-term game. Instead of trying to guess what will go up, focus on building a diversified and consistent portfolio. One efficient method is DCA, dollar cost averaging, where you invest a fixed amount every month, regardless of the asset's price. This reduces risks and takes advantage of compound interest over time. If you want to grow fast, the key is not taking excessive risks but rather investing with discipline and reinvesting your gains. The earlier you adopt this mindset, the faster you'll see results. Procrastination is one of the biggest enemies of financial freedom. We've all had that thought, I should have started earlier. But what many people don't realize is that every month, every year without investing means lost money. Let's do a simple calculation. Imagine two people, John and Lucas. John starts investing $500 per month at age 25. Lucas, on the other hand, delays this decision and only starts at 35. Both invest until they turn 60. John, who started at 25, accumulates $2.3 million. Lucas, who started at 35, accumulates only $800,000. In other words, just a 10-year delay resulted in a $1.5 million difference. This happens because compound interest needs time to work. The earlier you start, the greater the multiplier effect on your money. Many people avoid investing out of fear or lack of knowledge. But the real risk isn't investing, it's not investing. Every day without investing is one less day for your money to work for you. What can you do today to ensure a better financial future? The answer is simple. Start now. Imagine having the chance to multiply your wealth 2, 3, or even 10 times faster. That's the power of leverage. In the financial world, leverage means using external resources to maximize your gains. But beware, when used incorrectly, it can lead to significant losses. There are three main safe ways to leverage results without taking excessive risks. Capital leverage, using smart credit to invest, such as financing rental properties or taking strategic business loans. Knowledge leverage. The more you learn about investing and business, the more money you make. Knowledge protects you from mistakes and opens opportunities to multiply your wealth. Time leverage. Creating passive income sources, such as dividends, royalties, or automated businesses, to make money even when you're not working, only as a synonym for debt. But the wealthy understand that when used correctly, leverage is a shortcut to financial success. Many people start investing but fail to maintain consistency. This happens because they don't create an automatic system for their contributions. Just like paying a bill or shopping for groceries, investing should be natural and automatic. The best way to ensure you invest every month is by setting up automatic contributions. This means defining a fixed amount that will be transferred to your brokerage account and invested in pre-selected assets. When the process happens automatically, you avoid the mistake of spending money before investing. Another strategy is reinvesting earnings. If you receive dividends, rental income, or interest, don't spend them, reinvest them. This simple habit maximizes the power of compound interest. Building a solid financial routine is the secret to accumulating wealth without making difficult decisions every month. The more automated your process, the faster and more consistent your financial growth will be. And what if I told you that you could transform your financial life in just 5 years? It might seem like a short time, but it's possible, if you have a well-structured plan. Here's a practical roadmap to accelerate your financial growth in the next 5 years. Year 1, organize your finances, eliminate bad debt, and learn about investing. Set a clear goal for how much you want to invest monthly. Year 2, start investing consistently, diversify your assets, and increase your income through new opportunities, such as side hustles or businesses. Year 3, scale your investments, reinvest all profits, and create new passive income streams. Year 4, accelerate your wealth by using smart leverage and higher return investments. Year 5, consolidate your financial freedom by refining your strategy to maintain continuous and sustainable growth. If you follow this plan, you'll be in a completely different financial position within 5 years. But remember, time doesn't wait. The sooner you start, the faster you'll see results. If you look at people who have achieved financial independence, you'll notice they all followed certain common principles. It's not luck, and it's not a coincidence. It's proven strategies that anyone can apply. Here are the 3 main lessons from millionaires that make a difference. Invest early and consistently. Most millionaires started investing as soon as possible and maintained the habit throughout their lives. Focus on assets that generate passive income. Instead of relying solely on active work, millionaires build income streams that work without their direct involvement. Maintain a growth mindset. They never stop learning and always seek new opportunities to multiply their wealth. You can apply these same strategies to your life starting today. The path is already mapped out. The only difference between you and those who have already made it is when you decide to start. See you in the next video. So make sure to subscribe to the channel so you don't miss the next tips that could change your financial future. See you soon.